Today we have a special topic for you, a topic that is very important, especially if you're thinking about buying a home.
Understanding closing costs when buying a home. Stay tuned.
Hello everybody, this is Gamalier, broker realtor with Sturgis Realty Group.
And I'm Alan Rios. I'm the realtor with Sturgis Realty Group here in Metro Atlanta.
Today we have a special topic for you, and this is a topic that every buyer should know.
That's right, and that is understanding closing costs when it comes time to buying a home.
Now, when you're looking at closing costs, everybody asks, how much money do I need to buy a home? Today we're going to discuss, give you a quick way to figure that out, but also we're going to give you a sample that's going to break down all the details so you know what
and
to
I
expect.
hope you love math, right? Because we're going to break down the fees that are involved with the closing costs, involved with the purchase of a home. And the two factors that you want to consider as far as the closing costs are the down payment, which is a big point when it comes to purchasing that house. It all depends if you're doing conventional, which is a minimum 3% down, FHA loan, government-backed loan, 3.5% down, or you got the no money down option of USDA and also VA loans.
And that's very important, Alan. Obviously, when you're looking at closing costs, like Alan mentioned, you got a down payment. For this sample that we're going to give you later, we're going to use the conventional, which is 3%. And we also going to look at the closing costs. Closing costs typically range between 3 to 6%. So that gives you an example of what closing costs could be. And you also remember you got to add the down payment to it. But we're going to start with this sample today, and this is a sample of a home they have it for sale right now for $300,000.
All right, and one of the key points when you're putting in an offer is the earnest money, right? So this is a promise to the seller that you are invested in this home. And in this particular example, earnest money, as far as the amount, is negotiable, but on average it's about 1% of the purchase price. So in this example, it's $3,000. And one note that is very important here, if you just happen to default on this loan as we're going through this process, the seller actually gets to keep their earnest money.
That's very important to know. So make sure that you use a good loan officer, and also make sure you use a good realtor experience that are able to put that contract together and protect the earnest money. But another thing here, moving to the next thing, obviously, is the down payment. Like we mentioned in this sample, we're doing a conventional loan. So we're using a 3% down payment. That is 3% out of the $300,000 purchase price. That puts you at $9,000.
All right, let's take a look at some of the bank charges now for taking out that loan, right? We're going to begin the process. And the first one is the loan origination fee. And this is roughly around 1% of the purchase price. And we're looking at a loan origination cost of $3,000 in this example.
And just keep in mind, every bank is different. They may have higher or lower fees, different fees, but pretty much this list that you see here that we're breaking down for you are the fees that you're going to be comparing when you're comparing other banks. In every bank, make sure that you're not one of those buyers that say, oh, they have the lowest interest rate, I'm going to go with this one. A lot of times what happens is that you don't realize they buy down the rate, you end up paying a lot more closing costs, and that loan is going to cost you a lot more. So compare apples to apples and make sure you look at interest rate and closing costs. Moving forward, we also hear bank fees. Yes, it is. The bank fees here, the other one is the processing fee, which roughly in this sample is $900. You also have the underwriting fee, which is the underwriter who reviewed the loan, approved the loan. It's $350. You have the appraisal fee, which is $770. And keep in mind, this is a fee that you typically pay ahead of time. Once you go into contract, you do the inspection, you have to pay the appraisal on the front fee, which is $770.
All right, and let's continue with the fees. The credit monitoring service fee. Right here, it's only $4.50, but they still charge you that, right? Credit report, very, very important here, right? We're looking at a credit report charge of around $38. And then the next thing we're looking at is the flood determination fee, Gamalier. Which
is that very important, obviously. The bank's going to make sure that your home is not located in a flood zone, because obviously if it's located in the flood zone, the bank is going to require for you to have additional insurance, which it could be very costly, flood insurance, so be careful. So they're going to do that and verify that it's not located in the flood zone. And that obviously is a fee of $8 for flood determination fee and $5 for the flood life and coverage. But you also have the life of the loan tax services, roughly around $48, and the tax certification fee of $25, which is a total, when you look at the total bank fees, we're looking at $5,148.50.
All right, so that's a look at what the bank's going to charge you for taking out the loan. What about the prepaid charges here?
Well, prepaid charges obviously is something you pay ahead. That's what they call prepaid. And you're looking at city, county, and state taxes that you typically pay. And for this sample, it's a prorated of $900. You also have the prepaid interest as part of the loan that you pay the prepaid interest. Keep in mind for this sample is $267, which are pretty low. Normally, if you close at the beginning of the month, you're gonna pay from the first of the month all the way to the end of that month. So they're gonna charge a higher prepaid interest because you're closing at the beginning of the month.
Sure.
Tip for buyers, make sure you close at the end of the month, and that way you pay less prepaid interest, which will accumulate to less closing costs when you're closing on your loan.
And as we mentioned, about conventional loans when you had to put minimum 3% down, well, with that comes PMI, so private mortgage insurance, and that can range anywhere from 0.58% to 1.86%. So in this example, we're using 1%, so that's $3,000 that you would have to pay for private mortgage insurance. And that total now comes up to $4,167.
And that's for the prepay. So obviously right now we're gonna move at what you're gonna do, what you're gonna pay when you're dealing with the attorney, what the attorney does. So one of the things that attorneys are gonna do is they're gonna do a title doc, prep, and binder fee, which is roughly around $75. Then you have the attorney fees. This is the fee that attorney keeps that you pay for their service, and that's roughly around $775. And you also have the title stamp that is roughly around $200.
Yeah, and we have some additional fees as well. We've got the CPL fee to the title company, and this is basically your closing protection letter, and this is roughly right around $500. And then the owner title insurance, right?
Very important.
That is very important, right? Just in case there's something on the title, you don't want that to haunt you down the road. Well, you're gonna have to pay for that insurance right around $586. And then the lender also takes out title insurance to protect the bank, right? Hey, we're gonna charge you $613 for that.
So obviously it's very important, like Alan mentioned, about the title insurance, because the bank is going, if you use the loan, the bank is going to require you to have that, so to protect themselves. And we have a total of
$2,749.
So that's a total for what you're going to pay for the attorney area. Obviously, now we're going to talk about some of the fee also that you have for recording when it comes to state and local taxes that you pay.
City and county, So let's take a look at that. The intangible tax to the county, right? We're looking at roughly right around $900 here. And then the transfer tax to the county, right?
Yes.
Is right around $228.
That's typically, the transfer is figured out for every $1,000 you pay $3. So in this case, we have a $300,000 home, and that's how we calculated it to the fee that you see there. You also have the recording service fee, which is the electronic submission for the county that you pay, and that's roughly around $8. And then you have the recording fee for the county, of course, which is $50 total. Their recording fee of $949.
All right, so that's all the city, county, and state charges. And now we're going to talk about HOA, Gamalier.
And obviously, we live in Georgia, so if you live in Georgia, or if you come to Georgia, you understand that we have a lot of homeowner association here. And keep in mind, if you're a condo or townhouses, typically you pay association monthly. It's typically a little bit higher. But if you have a house, a lot of times association fees are a lot lower. In this case that we have here, we're roughly a homeowner association annually is around $500 for this home. So if you look at our homeowner association charges here, it's $200 for moving fee. That means that the association will charge you $200 to be able to come in and move in. That's a new resident. In addition to that, you had a monthly fee of association of $41.67, which we got that by dividing 12 by 500, which gave us the $41.67 monthly fee. Total association is $241.67.
All right, so HOA charges, like Gamalier mentioned, very common here in the state of Georgia. Sometimes you can avoid it, obviously. There are some properties out there that don't have HOA, but in this particular example, we included it. All right, let's take a look at some of the miscellaneous credits, right?
And those are very important, obviously, because they're credit. These are money there.
That's right.
They're going to help you.
Back to you. It's coming back.
So we have a home warranty here. This home warranty is something that was negotiated, it's paid by the seller.
Yep.
So that way you have that credit of $500. You also have a lender credit, which is not very normal, but you see it once a while of $500 also.
And on occasion, you'll see a seller credit, right?
Yes.
In this example, we have $1,000, right? And then earnest money. Remember the earnest money we talked about?
Yes.
The money you were giving to promise the seller, the $3,000, well, that gets credited back to you, right?
Yes.
So that's very important there. Appraisal, you already paid that up front, all right? And then the city tax proration, right around $900. What does that come out to, Gamalier?
That's come out roughly to $5,900 total for miscellaneous credit. So when you add everything you have here minus the credit in here, you end up with a total of
$16,355.17, which is about 5.4% of the purchase price. And we talked about it can range anywhere from 3 to 6%.
That's clearly buying a $300,000 that you have. If you buy a $300,000 right now in this market, is roughly those number estimates that you're going to be coming out of your pocket with a roughly $16,355.17. That is to include the down payment and all the closing costs on the loan.
Sure.
And keep in mind, we also have additional information. Interest rate that we use to calculate everything here was 5.1, which is roughly what we have in the market right now as we speak. And it's a 30-year term, which is give you a roughly payment for this house of $1,630 for the payment of the bank.
Yep.
Plus you have taxes and insurance. There's roughly around $333.33 a month, which give you a total payment of $1,963.33. This is a payment that you pay directly. And if you're escrowing, what is escrow?
That is right.
And escrow, obviously, everybody's going to ask, what is escrow? Escrow is when you paying one payment to the bank, and that payment includes not only the bank payment, but the bank is paying your taxes and insurance included. So you pay into them, and then the bank turns around and pay the taxes and insurance for you at the end of the year. So you don't have to be paying the bank and then pay separate taxes check and then pay the insurance. So
the third party takes care of it all.
It makes it easier. Yeah. So that's why a lot of people escrow. It's just convenience.
It is very convenient for sure. All right, that was a lot of information we presented to you, but it was very helpful information, hopefully, when it comes to purchasing a home and kind of understanding those closing costs. And no worries, we've got great lenders out there that will go over a lot of these with you as far as the loan estimate is concerned. And we'll sit down with you as well before closing and kind of go over the closing statement to kind of go over things line by line if you have any questions about those closing costs.
And definitely when you're working with an experienced agent, they could break down and help you. And this is number, don't worry about it. Like Alan mentioned, these are numbers that we would know way ahead of time before you buy that home. You know your payment, you know the breakdown, and a good loan officer and a good also realtor could break these numbers down for you to help you out so you're prepared. But most important, you know the numbers before you sit in the table. I hate when agents or realtors or loan officers don't break down the numbers to the buyers, and then they go to the table and they're surprised of how much money they have to bring to the table.
And then they want to back out, right?
Yeah, unfortunately, they're surprised by them, but you should know your numbers before you look for the home. Know how much you're going to pay for the monthly to get an estimate of what taxes and insurance and those areas are going to cost you. And obviously, if you have a question, we'd love to hear from you, whether you're someone coming out of state, someone living here local in the Atlanta area. We'd love to hear from you. If you have specific questions about this video, put a comment below and we'll answer that, or call us directly. We'll be happy to hear from you.
And don't forget to click like to our videos, especially this one here, and subscribe to our YouTube channel, and also click that notification bell so you know when our videos will be released. It comes out once a week.
And thanks again for watching the video. I hope this video has been helpful for you. Have a great day.
Take care.